I'm Grant Mercer, and this is Storm Stock Solutions, your clarity through the chaos before the opening bell. Heading into the new session, the big narrative setting the tone is all about inflation and policy. According to reporting from MarketWatch, there's a credible case building that inflation relief is on the way if three forces align: stronger productivity, tame oil prices, and lower taxes. If companies can do more with the same workforce, if energy costs stay under control, and if tax burdens ease even modestly, that's a backdrop where the Fed doesn't have to slam the brakes again. Futures traders will be watching any data or corporate commentary that touches those levers. At the same time, there's a geopolitical wildcard hanging over global risk assets. MarketWatch highlights that Donald Trump is threatening 10% tariffs on European countries in a dispute tied to Greenland, with the Supreme Court weighing his broader tariff authority. That puts trade policies squarely back in focus. Industrials, autos, and large multinationals could see outsized moves if we get headlines suggesting escalation or legal green lights for broader tariff powers. On the upside, there are two policy-driven themes that traders have on their radar this morning. First, that inflation story from Maury Stetner, productivity gains, subdued oil, and lower taxes, acts as a macro tailwind for sectors levered to efficiency: tech, industrial automation, logistics, and even some consumer names that get relief on input costs. If you see positive surprises in productivity data or continued calm in crude, that will reinforce the soft landing camp. Second, Beth Pinsker's MarketWatch piece on Trump's proposal to let people tap their 401ks to buy a house without paying the usual 10% early withdrawal penalty. That's not law, it's an idea, but it's already shaping conversations. Areas traders are watching include home builders, mortgage lenders, and consumer finance names, as markets handicap whether such a move would meaningfully change savings behavior and bring new buyers into an already tight housing market. Underneath the index-level story, there are some quieter currents too. Jessica Hall's reporting on ABLE accounts expanding eligibility up to age 46 means roughly 14 million more Americans with disabilities could gain access to tax-advantaged investment accounts without jeopardizing key benefits. That's a slow burn theme, but it matters for longer run flows into diversified funds and index products. On the flip side, even without a dedicated list of risk sectors, there are clear areas to handle with care. Mark Hulbert's column warns that the financial elite aren't worried about a stock market bubble yet, but you can't afford to be so complacent. That's a reminder that valuations are elevated, and late cycle complacency can make pullbacks sharper when they arrive. Traders may lean a bit more into value and lower PE steady Eddie names like the 20 cheap S&P 500 stocks Hulbert highlights, stocks with records of cushioning the blow when earnings growth slows. You also have some stress showing up in the real economy. Charlie Sabgier's piece on Gen Z men, worried about having enough money, yet confident they'll own a home someday, speaks to the tension between aspiration and affordability. That keeps the spotlight on housing, wage growth, and consumer credit. And Charles Passey's coverage of the Verizon outage and the question of whether carriers should be forced to issue mandatory refunds when your whole life is on the phone adds another layer of regulatory risk for telecom names. Let's talk briefly about a few sleepers this morning, stories to keep on your watch list rather than in your order ticket. Quentin Fottrell's column about the wealthy friend who doesn't need more stuff hints at a shift in affluent spending habits, away from physical goods and toward experiences, legacy, and philanthropy. Over time, that influences luxury, travel, and high-end services. Hulbert's cheap S&P 500 screen is another one to tuck away. If volatility picks up, that defensive playbook tends to get pulled off the shelf. And the ABLE account expansion is a structural story that could gradually deepen retail participation in markets. As the market gears up to open, here's what I'll be watching most closely. Any hints on those three inflation levers: productivity, energy prices, and tax policy? Headlines around the proposed 10% European tariffs and the Supreme Court's stance on tariff authority, and fresh commentary on retirement and housing, especially around 401k access. We'll be back with intraday updates once the market is trading to help you separate real signals from noise. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets.